Hello, hello, hello. Good morning. Welcome to another US Futures Trading Stream. Today is Tuesday, September 19th. It is 9:02 Eastern Time in the US, 9:02 a.m. Alright, something really fast here before the open. Something has changed in the market. We will. Why? I always check my charts, weekly, daily, and monthly charts. This is the monthly, weekly, and daily here. Why I have two here, two dailies. This is the average daily, and this is the current contract. What we were checking, I was checking the previous day, previous weeks, is the monthly time frame is trending lower, but it is above this range. We have this big range here, like for 12, 13 months range. There's a breakout of that range, and the market is forming another range. It is small, a smaller range here. Notice how far this is, how big this is, and this is kind of smaller now. Trending lower in a range. The weekly was trending higher in this range as well. The daily was kind of crazy. It was doing crazy things. The daily was going from shock coverage to long liquidation, based on what we saw, what we can see in the market profiles. And the change that I mentioned is this chart. The weekly has ended. It was going higher, and that trend, that upside trend, has ended yesterday. Because yesterday the market took this over this weekly bar low. We have balance, 2-week balance, previous to this breakout of the 2-week balance. You can call it also 1, 2, 3, 4, 5-week balance as well. This breakout, now there's excess on the upper side, and the market has fallen back inside this range, which targets the opposite side, which targets this low. But remember, this is a weekly time frame, okay? If there is something here, this is the potential destination of this trade, it will take weeks to develop. It may take weeks to develop. I remember that. I came back again, and also something that I have noticed today again. I had this trend line here that was formed before. It was curious. What I had first was these 1, 2, 3, 4, 5 bars just aligned pretty good for a breakout here, and then has fallen back again in this trend. Notice this is what I noticed today, and the homework that I was doing yesterday. Something that I haven't noticed is the incredible, this is very impressive how low this volume is, or was yesterday. Very low volume. Not just that, not just the market overall, but also the ES. That's an incredible. I mean, come on, 1 million, 1.1 is very low. I have seen this come down all the way to 800, right? Not when the rollover process is in progress, but to really 800,000 was really low. I guess I saw that once, once in the last 2 years, but it was really low. And this is low. But 1 million is very, very low. What this tells me is that there's no interest in whatever is happening here in this market. That amount of contracts traded plus low volume here, this shows no interest from bigger time frame traders, bigger time frame capital here. This is just this is just short-term trading here going on. Whatever happens or whatever is happening in this market, it is, I would say, it is not that serious. It won't have since it doesn't have the volume to back it up. I don't give it too much seriousness or whatever you call it, right? The main thing is this, but it doesn't mean is that the market cannot move long distances. Actually, it could be easier, right, for some trading or some big traders to move the market, because actually the volume is low. It doesn't need much to move. Can you see? It could be easier for bigger traders to move markets. And this weekly reference here, this low here in the weekly time frame, this low here, is this line, okay? Is this one. Yes, yesterday's low. I want to see if there is acceptance below this price. If the market keeps building value below it. Notice also that in the daily, you have this breakout to the upside, falling back in this 6-day or 7-day range now. And the potential destination is this low here, right? And the market, while this is a destination, it doesn't have to happen in one day. We were talking about that on Friday. It may take, since just look at this, right? How much days, how long it takes for the market to take this high. Once the market can break out, there's a breakout to the downside, fails, comes back inside this range, and how much it takes to take this one out, right? 1, 2, 3, 4, 5 days. The same thing can happen when the market targets it, when the trade targets this low. There is also lack of excess here in this day, and a very thin market. We had a 4,500. We were also talking yesterday that there could be some kind of trade here based on the 4,500. The market can or could, one of these scenarios was this, all right? The market trades back and forth through this 4,500, and the next time it just fails to reach this 4,500 and sells from here. The same thing can happen in the opposite direction. It can open up here, trade it through here, come back and keeps rallying towards the opposite side. And something really important to me now to carry on, this information, this is something that I'm going to carry on. What happened yesterday, for example, it was selling from POC yesterday. This low here, this low is very misleading here. We have excess here in the lower side. But the way how this low was made is very questionable, because it has no taper here. There's a huge amount of volume. There's a huge amount of volume on the lower side here. At this low market, the action was not completed when it was going lower. You have accumulation of volume down here. And I will carry these distributions here, because what I see here is 1 day, 2 days, 3 days here. Yesterday, closing the lower distributions which adds volume, which just put these three together, right? This distribution, this one, and what happened yesterday. Yesterday, we don't have any distributions. All the three distributions we have yesterday were closed with the late break, with late market break. It just closed it and just added. Just imagine there is a lot of volume. This one plus this one, this tool has big volume over here. For you to, so you can have an idea here. Just look at this. Yesterday, look at this amount of volume, 50,000, 40,000. Yesterday we have 50. Okay, there's a lot of volume in this area, right? And also, these pinks here, they are supposed to be medium volume. You got 20s, almost 30s here, 20s here. Just look at this day, for example, here. You know, this is big volume. How much it is? Thanks, right? 50s up here. There's big volume here, big volume here, big volume over here as well. The market did a lot here, coming up here. But you have to notice, we have to notice that when the market tested or traded towards this area, this ball, it couldn't take it. It couldn't go past through. It just dries here and it stands for 1, 2, 3, 4, 5 periods in this area here. Market was very slow around those area, and also rotation increased when the market made the highs yesterday. Now the overnight, we got settled here around the opening. We got traded above, has traded above 7, has traded below 7. I would say this overnight inventory is balanced. Okay, meaning that the shorts and the longs have been rebalanced here. Maybe it's getting a little bit short here. You know? We have these longs here being liquidated here, these shorts being forced to cover, and the longs here are being liquidated here. Yeah? But notice how much it extends, how far this extends to the downside relative to the distance that this range has. Okay. I'm trying to remain as neutral as possible here. Let me open. I'm going to open my trading account here. This is what I have here. I have a simulator. I have my account. Just a second, please. Let me put this. Let me organize my. Come on, it's taking too much time. Okay, finally I got it here. Okay, I have it here. I have 2 accounts on Rhythmic. One was for the practice and another one live. What I do here in this kind of markets, I tend to use a practice account because it's just too. I am very cautious of this market. All right. Now, market is about to have a downside gap here. Yesterday we have the same action. Yesterday, we tried to gap. It failed to open with the gap, and it seems like it's doing the same thing. Okay, the context today is different. The context today is different. And let me see if I still have. Yeah. It tried to gap to the downside, come back inside the range, just above the weekly low. And the most important thing is this weekly low has been taken. Yeah. Then the weekly time frame now is the trend to the upside is over. Now we have 1, 2, 3, 4, 5. 1, 2, 3. There's another weekly low here. This is a weekly low as well. So we'll take two. The weekly time frame is kind of weak as well. All right. Now let me. I guess we will. I guess this market can gap today. From yesterday, we have an action to the downside. We have this downside action that has not been completed yesterday. It left a weak high here. This M came exactly to half back. This is not good. This is not. I mean, remember, but I say whatever happened, it doesn't help the back. It's not been backed for anything. It's not been backed by volume. So, and on top of that, you have this pullback exactly to half back. This is very very questionable. Yeah? The action to the downside was not completed yesterday. We have this week low. This is a daily halfback. This D low is a daily halfback, which is, buying from here is craziness. It's very risky. The context is the thing here, right? Now this one, M low also is weak. Now in the lower south we have this area that adds that makes this level, this D low, weaker. So this is exponentially weak, which is confirmed by the market, right? Because the market has taken all the traders that were buying here. When they say the market fall back here and it's starting a rally here from this level, it's absolutely weak. Now they are being crushed. They are going to be, if this remains, they're going to be underwater at the opening. The situation, let's see, right? This will be the second time the market opens below the weekly low. The potential destination is this low, this weekly low. What happened below this is also very interesting. I'm very focused on this one too. My focus is what happened below this. Can the market take this low out? If there's acceptance below this level, there's a good odds the market can keep coming lower. But I still have this thing in my mind, right? The volume is very, very low, insufficient volume, and the downside movement. I am telling it that it might not be that relevant. Now, I was taking 10%. Okay. 10% for the current high, 45.62. 45.62, 7%, 42.42. Let me put that on my charts. It's barely low. 42.42 is, yeah, but let's do it 42.50. 42. Okay, that's 7%. That will be a break. I'm trying to put a number to this, big time or bigger time frame capital here. That's expecting a pullback about 7-10% to get in the market. All right, let me post something on Twitter. I try to come back quick. My focus is what the market does with this level here. Is there going to be a gap here or what? Remember, this level here is quite questionable. M high is, also we have the 4,500 here. Okay. Everything changed. The market has come back. My market opened inside yesterday's range. Has come. Look for downside. Look at the downside. Come back inside. These lows we have here have been repaired now. Now what we have is the weakness is up here. Okay. Tremendous amount of weakness we have here up here. This rally. Now I think this rally has been completed. Downside. There's continuation of yesterday. This is the continuation of yesterday's action. What about volume? Volume remains low. We are so close to this level here. Now remember, this market, there is something that happens when we have this kind of situation here. What I'm monitoring here is, now the market's out of balance. Yesterday we had low, we had value lower, just like today. And the market tries to push value inside yesterday's value, inside this area at least. I think we have overlapping value yesterday because I'm considering only this low. Whatever value is here, I can see overlapping here. But doesn't have volume. It doesn't have any kind of volume. Now, a weak market doesn't do this. My weak market doesn't come back inside. Maybe it comes back, check this low, tag the low, trade a little bit higher, and then continues. It continues its directional move to the downside. What I was saying a couple of moments ago is this market can come back all the way up to here. All right, it can come all the way up to here and still will be a downside day. As long as the market doesn't take this high out, it is still a downside day because it has already taken this low. Dum, 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 dum. Now, when we have a market, what's the direction of this market? What's the directional move? The direction of the markets is the market's trying to go lower. Market's trying to take these lows out. Okay? Now, what traders do in this kind of markets is sell the rallies. any rally has good also means that is going to be sold. Now, when the market, when I sell is the question, right? So the market may have taken, it may have taken this low out, and I can say, oh, market is rallying here. No, but I don't see yet what's happening. This is still very. I mean, it's really so early in the period or in the session to say that this is that this is the height of this rally. Let's see what happened. Let's see first what the market, or can the market come back inside this area and repair these weak lows here. Remember that this movement to the downside has a weak base here. There was liquidation of this long inventory from yesterday and has a really weak base here. This LM are extraordinarily weak. There's the difference between this high, and this one is I mean, there is something that is something that we should be able to differentiate. What is the difference between these highs and these ones? Who can be selling here and who can be selling here? This is I was talking with a friend yesterday that this could be when the market took this the 4500. He made a good trade. He sold somewhere. He sold the market here in this area. I don't know where, but in this area, and closed when the market took this the 4500, and the talk was that this part here could be the laggard part of this trade. This and later, but we never know, right? We never know until L and M came up here. They keep selling from L here. Oh, okay. That I think that increases the odds that was the laggard part of that trade. That was the liquidation on yesterday's long inventory. Now, this could be a potential destination, but I want to see what the market does. There is relevant pieces of information here. We have very relevant levels here. The one is this weekly low, the base, the week. You also have the 4500 here and this weak base, and there's so many things here. I didn't take the trade yesterday. I didn't feel confident in what the market was doing. I didn't take a trade here. My volume was too low, and I guess you can see I make a mistake there. The risk was, I thought the risk was high, but I think it wasn't that much. I was wrong. Anything in here, your stop is 1 tick or 2 ticks from this high, or above this high, right? 1 tick or 2 ticks above this high yesterday, when the market was somewhere down here. It is clearly where this market is being sold from. Can you see the market is being selling, where the selling is coming from? It's coming from as close as possible from the weekly. Now the market has stuck this value area low. Let's see some selling appears here in the market push to the downside. There's good amount of volume here in this area here, but very weak mechanical trading here. And if I check my daily charts, what level do I have there? 4508, the potential. 4508 is here. What is this level? Why did I put this red here? No, there's nothing here. Lower distribution, this was the distribution close. Let me check. This is, I will leave that level there because this is the high, this is the trend line, it's right there. Let's put trend line. This is, I want to see what's this. It is just so obvious. If you check your daily time frame charts, you will see a trend line here around this level, which coincides with this closing the distribution from Friday. This level per se is irrelevant. Just this 50 also is the average contract, the average ES. The current contract also is 45.50. Now this notice where this high is coming. Man, god damn. This was a good selling here. And your stop is. I mean, notice this thing. Right? This is the thing that's happening in these markets. It's not going to last forever, right? This is what the current market is doing. This current market has been selling from very mechanical levels. It could be this weekly low, it could be this trend line here, or it could be the 50s. What else is in there? Right? Some very mechanical levels, and usually those kind of trades, those kind of trades, right? Either buy or sell, I usually aim to have maybe 1 point, a couple of ticks, or 1-2 points, and that's it. But it has been, during this contract, during the last quarter, it has been some really good, the market has been having some really good gains when trading from these mechanical levels. Now, your stop now is this level. And the closer it gets to this, the riskier it becomes. That's what I observe. That's my observation, and that is just based on observations, right? It seems like today is going to have better volume than yesterday. Now the market has come back to this level. No, can you see? Okay. This candidate be a look below and fail. Look below, come back in range, and the potential destination is this high here. I expect maybe some spike. If there is a spike when the market comes back to here, to this level, that could signal the potential end of that movement. If there's no spike and the market continues going, steadily to the upside, that's okay. There's potential upside continuation. Now notice how this high is much better than the high the previously have here. The bunch of stops that we have here have been removed now. Let's check. Let's see if the market can take this low out. Now, considering the market is inside, it's like has come back inside range. Overlapping value now. There is a significant amount of volume between the 45.03 and 3 points above this from here to here. Right. And the market is just testing, coming back inside. It couldn't, if the market gets inside this, there's potential to some upside. But if it cannot take this this chunk of volume doesn't come back outside. What is relevant here for me is that this is a supply for a potential upside movement. The low is very close to overnight low as well. Do you have any questions? Answers? Oh my god, the same kind. Look at where the market opened yesterday. Huh. Just a couple of ticks from taking this low, traded back. Traded below the previous day low. And now it's saying it's doing the same. Trading back inside. Below and then back inside. Oh, traders will be expecting a rally here. Just like yesterday. It's unbelievable. Just have to get in the mind of traders, of your competence here, what they are trying to do. Very short time frame trading. It has good volume here. Good volume here. This volume yesterday we have a lot of volume in this area here below the 4500. A lot of volume here, this 3 first period, and I guess one of these two here as well, somewhere in here or here. Every other period, all the other periods, the remaining periods has really low volume. Well, that was remarkable. Now, if there is something serious to the upside, this upside movement the market did to take this level out when the market made a high exactly at this level, those are the stops being hit. If there's anything serious, the market will come back, retrace this, and then the second time it comes, it just keeps going higher and higher. That's a more serious movement. Now, the movement, the market is going to the downside. Remember, the trend is to the downside. This will be the 4th day the market is going to the downside. If I do a trade to the upside, I will be doing a trade against the trend. which has to work fast. Mark is coming back to check this level here. Why do I have this here? Oh, this is the one. Ooh, look at this. Look at what it's about salt. Just this spike here, selling for the base of the spike. Huh. Did we have any kind of news today? Housing starts and permits? No, that's nothing. No, we did not have anything today. The VIX is 14. God damn, really low. VIX here. $53. I thought that this period was going to have higher volume than yesterday, but it looks like it's going to be about the same, maybe 3-5% higher. That's really low. I don't like this kind of, when the market has this when the profile has this shape, I don't like this one. I like this better. Okay, I like this low better than I like this high. The reason why I say that is I have taper here. The market comes lower and volume just dries here, just dries. It gives me a shape. I got this shape is decreasing, right? Something like. I guess if I can to explain better, something like this. It just dries here, right? This part here, this part up here, the market was trading somewhere in here, and just make a spike. Boom, has a spike, right? And then start building value here and dries here. Notice that's the difference that I see between this high here and this low here. I think this is better than this one here. It doesn't mean per se there is nothing there, right? But it's just something that I want to be aware. Consider also the stops that we have here. The base of this movement is this is just a continuation of the downside. Of the action to the downside from yesterday. The action is still in progress, hasn't ended yet. It seems like it has a potential destination is this low here. I want to see what the market does around that level. Will it have acceptance below that? If you check your candlestick charts, you won't see this as a weekly low. You will see 44.30, which is 50 points lower. Because what you will be watching is an adjusted contract there. Remember what I say about this low, that this low is better than this high, right? Per se doesn't mean anything, right? That's not as enough reason or reason enough to buy there. You need to see context. What this market is doing. Right? 1, 2, 3, 4 days in a row going to the lowest, going to the downside. Why you want to buy a market or something? Right? Why you want to buy a market that's going to the downside? We have to get used, try to get used to that concept. Try to identify what is the direction the market is trading. What is the directional move the market has? Market very close to reach the opposite side of the 8-day range. It seems like volume is going to be slightly higher. Maybe, but not much really, maybe 2-3%, something like that. Yesterday we were talking also about how this low, when the market made the low, made a low, it didn't have taper. This low was bad yesterday. Okay, this low was bad. It was misleading. It was misleading because it has excess, but it didn't have taper, and the way how it was made also was very questionable. Okay, the market break in the afternoon. It did not reach this low. It left a weak low. LM lows were very questionable. This low has been corrected now. And now we have another weak low here. Poor lows down here. Look at that. That low is very weak low. We got the action remains to the downside. This poor weekly low, poor daily and weekly low is now even more weak now. Very questionable low here, exponentially low. Good also market is going to take this low out. Okay, that low has been taken. Now, the market has reached the opposite side of the 6-day range. 44.68 would be the previous breakout level to check, or the 44.77. Yeah, 44.77 right here. This would close. What this thing will do, 44.7750. This is closing the gap. This closes the gap, the fictitious gap we have, the 50 points difference between contracts. This is it here. Notice where this ends. God damn. My God. Now tomorrow we have FOMC. Okay? Be aware of that as well. Wonder who want to be short in front of such a relevant news. Alright. Okay. Oh, come on, don't tell me. Don't tell me you're going to stop one tick from closing this gap. No way. So, can you see where the market is being bought? It's just a reflection of who is doing the trade. Now that gap has been closed. Remember, that's a fictitious gap. This is an inexistent gap. Gap closed now. And you will say, oh, gap has been closed, right? There's no gap there, man. There was no gap there. Now, closing a gap is if you close a gap, that is, you start to, what do we have below? There's nothing below there. Oh, as a matter of fact, there is something there. There's a range also, 3, 6, 9, 10, the range, 10, 11, 12, the range there. Huh. Another, which is another, okay, the same thing, right? Now we are in between two ranges. We are 1, 2, 3, 4, 5, 6, 7, 8, maybe 9, 10 day range. And below this, we have 12-day range. And the market is right there. Has re-entered the lower range, which is this level here. Now, let's reapply. Let's reapply the guidelines here. Okay? This trade, this balance, this range has been, this trade here has been completed. The next thing to the downside is the opposite side. This range, which is 4,350, 4,350, is the opposite side of the range. Right? Which will be the high of another fictitious gap. Okay, the next gap below is another non-existent gap, actually. The same gap that has been filled here is the same gap that we have, which high is 43.50, which by the way is a weak level as well. It came from exactly the 100 moving average. This level has been, this is not, okay, that, I guess, but is more relevant is this weekly low. I got this one as well. This set, okay. The action remains to the downside relative to yesterday. This is a continuation with yesterday's action. all of this will go away here. I want to mark. I want to mark this level. What level is this? Oh, come on. What is 83.25? Oh, it's still here. Red. Where are you, red? 83.50? Okay. I got that one also 70, 70, 50, 70, 70. Right where the market is right now. This level is also consider this could be. I'm trying to monitor this one as well. And weekly low 94, which is this low here as well. This could be the relevance. Dash. All right. 828. Can this be a buy here? I think this market is very short now. It's very short. Looks like it's very short. The same kind of high we have here in this period is the same kind high we got here. The market there's nothing here. Market didn't do any kind of trade here. Nothing, zero trade here. Boom, there's just no bid there. VIX is a little bit higher here. It's increasing just a little bit. Okay, balance. Notice here at this moment, traders are very enthusiastic shorting this market. The market is going to hell. Remember what happened yesterday? The volume is unbelievable slow yesterday. I am very cautious here of this downside movement. And on top of that, this is the end of this trade. This is the end of the trade that took this 6-day range that we have here the last week. When the market has a breakout that failed, which put the opposite side of the range as a potential destination trade. That low has been taken. The gap has been filled. Let's see if the market builds value below this area. Okay, because what actually targets what the target will be for the movement would be 43.50. That will be the target. And how much or where is that 7% lower value? Where it is 7%. Remember we were checking. Come on. It's not here. Oh, 42, very low. 42, that's 200 points. It's not that much. It can 2 days, 200 points. The market can make it in 1 day. But with these VIX, got my doubts there. Oh, by the way, the next weekly low is 44.76.50. God fuck me. Is this level? Huh. God damn it. No freaking way. No way. 44.72.50. 44.72. No way. Oh yeah. Is this one? Yeah, this is the one. 72.50. I have this one here. Oh no, I don't. This also. This also is a weekly low. 828. No. No way. Weekly low. There's another weekly low here. That. Highly or daily low range 68. That's not true. Oh, another thing is the bond market. The bond market was really low, was having really bad opening today. Look at this. Look at has recovered things. Okay. There's another weekly. We have one weekly. Now, let's pay attention to that. Sometimes we just are so fixated on the negative things. Did you see what happened when the market took this low? Well, this is the fictitious gap. So that could be a reference that traders may not be aware of. But this low, this weekly low, that for sure. This is this is a more visible reference here. And as soon as the market took this low out, this price spiked to the downside, was rejected. Notice where it came through, where the selling is coming from. Selling is coming from half back, right? Man, I don't know here. If you don't have your short here, somewhere in here, and that's the relevance of doing the homework. I miss this thing. Okay. there was this market, there's change in the market. The relevance of change. What happened is that the market keeps going higher. Everything the market was doing its thing in all time frames, weekly, daily, and monthly. And the only one that has remained constant was the weekly, was going higher, 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 higher. And now there's change in the weekly. So what you can see here, the market's paying attention to this inventory here in this time frame. Notice where this low is. And this is something that I just saw now. If you use your regular charts, you won't see this in this low. This low, you won't see it. You won't see it in. This low is down here. If you use the current the average contract, but if, and this is the thing. This is the current contract. Notice where it is. Right? There is no gap in the daily, no gap. Screw the gap. There is no gap here, and that fictitious gap is this level here that I highlighted here. And which one is going to be more relevant? That's the question. Sometimes I focus too much on what this market, instead of focusing on what are the things that can keep the movement alive. I tend to focus on what is against the current movement, and as that sometimes can lead you to second guess yourself. All right, it is 10:20. Unless you have any questions, I guess I'm going to call it a day. Hope you got a good day today. Wish you the best. See you tomorrow. Bye-bye.